discussing the reluctance of NATO allies to participate in security operations in the Persian Gulf, says U.S. and Israel can finish the job in Iran without him. Also, a little bit of news, perhaps. He says that the meeting between him and President Xi of China will occur a bit later than anticipated. 5 to 6 weeks is what he said. Welcome to Halftime Report. I'm Mike Santoli in today for Scott Wapner. With me for the hour, Joe Terranova, Stephanie Link, Brian Belsky, and Josh Brown. Let's get a quick check on the markets. Had an attempt to follow through on yesterday's bounce. The S&P 500 up about 1/3%. It was at its highs about twice as much of a gain. The Dow is up 111 points. Crude, you see it there, 94.55. It's up 1%. It's been above 95 when the S&P was at its lows. It's been below 94, so that's been the game continuing there. So let's just talk about this bounce attempt, I guess we could call it, Joe. It's understandable to me why it has begun entering this week in a logical spot, which is a 5% decline in the S&P 500. We got to almost to the 200-day moving average. Seasonal factors start to turn better in the second half of March. And, of course, you have this residual hope there that we've reached the point of maximum uncertainty in Iran. Maybe oil has seen its highs. Still something to prove, I would argue, though, for the rally itself. What are you looking at?
Well, I think what's most important right now is that we break the correlation between higher oil prices and lower equity prices. And the appearance over the last several days is that, in fact, we're doing so. I also believe that we've established where that breaking point for equities is as it relates to oil. So the equity market does not like oil prices above 100, above $105. That seems as though to be the breaking point. It appears as though the equity market is comfortable, as it was in 2011, 2012, and 2013, when the average price of oil in each one of those 3 years was $95. The market was comfortable in that environment with oil. So I think if we just basically elevate the range of oil to 85 towards 100, I think we could live in that world. It's when oil spikes well beyond that the markets don't like it.
Steph, I mean, arguably in the early 2010s, the S&P was at 13, 14 times earnings. Maybe not as much was expected out of stocks. But how are you reading what the market's done this week, where it's tried to find a little bit of a foothold? Because you actually have seen some of the laggard groups, try to make a little progress this week.
Yeah, and that's exactly where I want to go. Actually, value outperforming growth today and yesterday. Banks actually finally catching somewhat of a bid. We have to watch that, but they've been a laggard and something that we all have been watching because of the private credit concerns. Energy, oil stocks, some industrials are doing well. So it's more of the cyclical story today and some part of yesterday. And I think, Mike, that's because in the face of uncertainties about war and the timing, the economy is holding up. I mean, you got the Atlanta Fed tracker at 2.7%. Weekly jobless claims last week were really good. I expect them to continue to be very low in the 215 range to 220. Retail sales, core was up 4%. ISMs, 2 months in a row, over 50. So that's the first time that's happened in 3 years. And industrial production now up for the 4th consecutive month. So in the face of all this, the economy is hanging in. A lot of it is AI driven, and that's a nice tailwind, and that's going to continue. But the consumer also is doing their part. Yes, it's K-shaped, but they're doing their part. When you listen to Bank of America, when you listen to MasterCard, when you listen to Visa, last week they were at conferences, every one of them said the consumer is doing just fine. And that's a big part of our economy, so I keep a close eye on it. But I like that, at least the follow-through on the cyclicals based on the data that we're seeing.
I guess the question is going to be, Josh, whether that good, encouraging evidence is going to run up against the potential that we have more friction in the story when it comes to what oil prices are doing, some consumer confidence issues since we're 2+ weeks into this Iran campaign. I do want to get your take, though, Josh, on the general setup here, because it's hilarious how we always talk about the S&P 500 in one of these sideways phases and say, look how resilient, it's rotating away from danger. I've said it a million times. And then we get to a point when the decline starts to wear on the index, and everyone says, oh, but we haven't seen the flush. It's been too resilient. We need to see people give up on this and to create some kind of a slingshot effect. So where are you looking for evidence that the market either has the makings of that kind of a comeback, Josh, or, we're still waiting?
I
think the modern investor is just different from what a lot of us are used to. Mike, you're a veteran of the markets like I am, so is Stephanie, so is Joe, but we have to acknowledge the fact that today's investor, they sort of get it like, oh, if I sell when the S&P falls 5%, I'm going to look like an imbecile in like 3 weeks, so I'm not going to do it. And instead, what we're seeing is, I'm going to use the word rotation for the millionth time, but I think it's the most important concept. Investors are flocking to the stocks that are going up right now. And, you know, look, the best stocks in the market concept is, where is the real strength? And think about the stocks that Joe has been talking about, I've been talking about, Stephanie, Chevron, Exxon, making record highs today. Look at the refiner complex, Marathon, Phillips 66, and of course Valero. And even like the oil services names, those did get hit a little bit harder during the Iran episode, but they're all right back. Baker Hughes, right back. These things are in substantial uptrends. So I think investors are like, all right, I get it. We're not playing the software game this year. We're not playing the data center game as much this year, maybe in the industrials, but not in the actual Mag 7 stocks. But this game, this is a great game. And you're seeing it everywhere. And you can't tell me that's just retail. I know the pros are doing it too. The other thing is, the only real panic that we're seeing, it's actually funny, it's in the private market. How do you panic in the private market? It's like a mime. Like, how do I get out of this invisible box? It doesn't even show up in the junk bond ETFs. So yeah, we have concerns. Yes, there are issues in the market. There are question marks. But I think the modern investor, at least for now, has done a great job rotating, moving to where the money is going, and ignoring the things that historically would have put them on the sidelines, even 3 and 5 years ago. And they just don't race to the sidelines.
I mean, did we have a modern investor 11 months ago, Josh, when everybody was liquidating everything at the lows?
I don't know that everybody did that. If you look at Vanguard data,
you can look at the flows.
If you look at Vanguard data, Charles Schwab data, you look at Fidelity data, 401k flows never stopped, and that's the real money. So seeing $20 billion come out of an SPY and then go right back in 2 months later, I don't really think is what the main body of investors are doing. Look at the 401k flows. They never budged, nobody sold, and I don't think they'll do it this time either.
We magically got 20% down with nobody selling, I guess. Okay, in a flash. Brian, what are you thinking about in terms of field position for the market here? And I'm looking at an S&P. We're at the December lows. Yes, we're up off of last week's bottom, but it doesn't seem as if there's a sort of a tentative nature to this comeback. And maybe that's to be expected because there's a pretty wide range of outcomes we're having to entertain here.
No, I think that's right. But I also think, too, to double back on what Josh was saying, take it from the guy that's been doing this since the late 80s. We were always looking for the big flush. The big flush rarely happens. And then people typically, especially in this market, don't get in fast enough. I think that's right in terms of the moves that we've seen so far. But I think what the market's saying is kind of what we teed up when we talked about our year ahead piece for 2026, when we talked about the market is clearly transitioning from a multiple expansion market to an earnings driven market. Stephanie talks about earnings all the time. We always talk about resilient. But from a sector by sector basis, the quality of earnings in 2026 is very good. The consistency of earnings growth is very good. I think we tend to make too much out of trying to catch the bottom in some of these themes, quite frankly, Mike, with respect to software and trying to catch the falling anvil, as I learned a long time ago, that old saying. But I do think what's happening today is a very constructive day, especially considering the broadening out across board. Small cap stocks are working. Stephanie talked about financials. We think financials from an earnings perspective are really going to be driving things the second half of the year. And we actually continue to believe both institutional and private wealth clients are way underexposed financials. And we really think that's an area where we're going to see a lot of gains.
Yeah, I'm not so sure about that, Brian. I think financials were the favorite sector coming in to 2026. All the
I don't agree with that.
funds.
The favorite sector, No way was it the favorite sector. Everyone was trying to play healthcare because healthcare in the fourth quarter, Joe, was the momentum play. I think financials actually were outperforming well before the fourth quarter. Everyone was trying to think more value side of things. And yeah, well, industrial, if you go back and look at some of the tape and on this show in particular, everyone was trying to chase energy, healthcare, utilities, consumer staples. They were much more defensively positioned. Financials, I think, at the end of the day, though I will say the money center banks, but everyone's missed the move in the small cap financials, which has been actually quite good. So I don't agree with everyone was loving financials
We're just
at all.
going to disagree. It'd be better if you were here and we could disagree in person. But if you look at a lot of the momentum funds at the end of 2025, they were all significantly overweight. I run one of them, financials. You had a lot of people that were coming on the shows and talking about financials being the place to be, banks themselves. And I think fundamentally a lot of those conditions are still in place, but you are seeing a recalibration as in terms of sentiment and positioning for that sector itself. I do agree with you on where we were at the end of 2025, where the market did its job in getting in front of the flush in software, the flush in the private equity names, and really pivoting towards the healthcare names, the defensive names, the material names, the REITs that so far have exhibited a strong degree of resiliency.
Guys, we want to get further into this financials issue. Actually, alternative asset managers, they are rebounding today, but private credit concerns, of course, continue to weigh on the space. New data shows it's another issue on the minds of respondents to the latest CNBC Fed survey. Senior economics reporter Steve Leisman joins us with more on all that. Hey, Steve.
Hey, Mike. Yeah, the war in Iran is top mind for respondents to the CNBC Fed survey, but there is concern about a more far-reaching impact from a downturn in the private credit market. Take a look at some of the data here. Yesterday's close 66.99. This is on the outlook for the S&P. Now that's come down to 70.16, but they also are pretty optimistic about a rebound from that lower number from 2026, going to 76.27 in 2027. That is. But asked about private credit worries, 66% say they're somewhat concerned it could reduce economic growth. 69%, and this is the one that may matter if it does, that it would create broader systemic risk. In fact, our gauge of systemic risk that we have, 75% now saying it's somewhat elevated. That's the highest we've seen since starting to ask this question about credit markets back a couple years ago. And you can see here, it's not the top issue. Tied for number one, higher oil price in terms of threats to the economy and the war in the Middle East, continued high inflation, policy uncertainty, and global economic weakness, which is something to think about in terms of what happens overseas to the economies from oil prices ricocheting back on the U.S. So private credit concern, not a leading one, but something being watched closely for whether there are broader implications for the U.S. economy, Mike.
Steve, thanks so much. Josh, love for you to weigh in on this. I mean, 2/3 of these respondents are saying that this could be systemic when it maybe otherwise can be characterized as just a little bit of a mismatch between liquidity expectations among certain investors.
Yeah, look, I think if you pull those 5 graphics off the board and 6 months goes by, we'll have 5 new ones that we can replace them with. And these concerns are, some of them are evergreen. Like you could throw up like budget deficit. I mean, it's actually very healthy that we've had multiple compression and a lot of things to worry about in the market this year. It's actually a better setup for people putting dollars to work today than when we're in these moments where everything just seems like it's going to be absolutely perfect. So this stuff is obviously food for thought, worth talking about. The reality for me, though, I'm not one of these Wall Street guys. Don't let this shirt and tie fool you. I am a man of the people. My text messages are filled with regular investors, people I know in real life, guys that install alarm systems, insurance salesmen, car dealers. You know what they do when the market's down 5% because oil's spiking, or when Trump says something out of pocket about tariffs? The first text to me is, all right, what should I buy? Until that flips, and it might, but until that mentality flips, I remain steadfast in what I was saying earlier. I think the investor class has gotten a little bit smarter, a little bit more self-aware before they panic. Would another 10% down change people's attitudes? Yeah, of course. But that's not the situation that we're in. So, that's the way I think you want to think about the market setup today.
No, I'm with you on that in general, because 5% down doesn't necessarily mean everybody should be screaming and running away. In fact, we had a 5% pullback, Steph, in November. And I don't think on any of these metrics you saw the panic in the numbers, and we did recover it. So it wasn't exactly like, a new bull market launching, but it was recovery back to new highs. So I guess that's just one way to contextualize all this. Just quickly on the financials, though, I do wonder if you're concerned that they haven't been able to make much of great earnings, obviously for the fourth quarter. The idea that they have this nice regulatory runway, they're going to get capital relief, and that they're kind of this sort of little bit of a problem child when you look at the leadership.
First and foremost, if we wait for certainty, Mike, you're going to miss a big, big move, right? I mean, if you sold on Liberation Day, you missed 35% growth for the next year. So to me, the market always climbs a wall of worry, to Josh's point, and it's whatever flavor of the month it is in terms of what we're worrying about. That's okay. That's why I always focus on the fundamentals, and that's why I always focus on the economy and the data points that we're getting, not only from the government data, but also from the companies. They tell you an awful lot of stuff at these conferences, and that's why I felt really good about adding to Truist last week and adding to the financials down 10-15% on the year, because I'm not concerned about the private credit issues for them. In fact, I can make an argument that the big six banks have taken market share from the private market industry. They have not been able to do that because of the regulations. And now those regulations are starting to ease, and I think these companies, you see it in the H8 data. I mean, the H8 data, we had great numbers, 18 out of the last 21 weeks. I mean, they're talking about record highs for C&I loans. That's what we want to see from the banks, and that's what they're doing, and that's what they're telling us that they're doing. So I expect the earnings to be good, and for the stocks at these valuations, I think you got to be adding to them.
Speaking of things companies tell us at conferences, we really got to get to NVIDIA and what Jensen Huang has been saying over the last day plus, and also how the stock has reacted to it. I do just want to have his take on what he was talking about when he threw out that $1 trillion backlog number. Let's listen to his comments.
We already have high confidence visibility of $1 trillion plus of Blackwell and Rubin. Not anything else, just Blackwell and Rubin. And so, we still have 21 more months of new orders coming in. Right. We still have all of the other things that NVIDIA sells. And so I just wanted to give everybody a baseline. The ecosystem needs to know directionally where NVIDIA is going. Now, of course, we plan with the supply chain. We help everybody with their capacity building. We prepare all the technology partners so that we can support $1 trillion worth of Blackwell and Rubin. And so it's an incredible thing.
Certainly an incredible thing. We still have to figure out how we're going to frame this. Brian, this is $1 trillion seemingly in cumulative orders through the end of 2027 for those two product categories. Right now, consensus top line for NVIDIA for this fiscal year and next, it's like $830 billion. So who knows when that stuff filters into revenue? Who knows how much of an upside guide this might have been? The stock is sort of shrugging. So how are you thinking about it, Brian?
Well, I think the stock is shrugging because people have been worrying about technology. I do think that the most important thing that he talked about was the baseline. And he's being very consistent in his delivery of information. And I think that makes everybody feel better about the other areas of what's happening in terms of NVIDIA's products. So think of like NVIDIA being the core inside an Apple, and then the rest of the inside of the Apple could be an AMD, a Qualcomm, and a Broadcom. And then I think that Apple in general has been bruised because the apple fell from the tree. And so now you got to kind of eat around the bruises. But at the core, NVIDIA is proving with respect to its fundamental consistency on where this is going. So that's why it absolutely positively, in our view, has to be a tactical position in S&P 500 product or growth product for the next 12 to 24 months minimum because of what it's doing fundamentally and providing that fundamental consistency with respect to the AI trade.
Joe, NVIDIA has, it's been sideways for half a year, but it has also kept most of its outperformance relative to like the NASDAQ 100 over that period.
Yeah, I don't understand why people are so frustrated by performance. I think Brian said it elegantly when he described the environment fundamentally for NVIDIA. You know who NVIDIA ultimately is. I made the comparison yesterday to Aaron Judge. Aaron Judge may have a season where he's only going to hit 35 home runs. He's not going to hit 55 or 60 home runs. That's still a really good season. And if you look at NVIDIA's performance over the last 6 months, it's outperforming the S&P 500. It is year-to-date the best performing Mag 7, and it's delivering on all the metrics that we were told were remarkably important for this company. You can't expect the company to have an 800+ % gain over a 24-month period like it had from the end of December 2022 through 2024. You're going to see a degree of maturity. You're going to see a moderation in performance. That doesn't mean it's a bad stock. It's not at all. It's one of the best performing stocks and probably the top stock to own in the market.
Who's your incremental buyer, Joe?
Yeah,
everybody is in this thing. I'm probably the only one that's not in
Aaron
this
Judge
thing.
is entering his age 34 season.
been
The
the
world
argument
knows
for a
he's going to
long time.
decline.
You've got 94% of the sell side that have buys on this as well. So it is a very well-loved stock. If it does not go up on great data that they did present yesterday, what is it going to take?
Does that mean it's going down?
Look, I'm equally as bothered by and worried about Broadcom because it doesn't act well either, and that's gotten a lot crowded as well. I think there's so much more opportunity on the software side, especially given what we have seen in terms of the declines and now more reasonable valuations.
All right, but my counterpoint to that would be it does not extrapolate that it means it's going down. Running in place, I am not, from a risk to reward standpoint, I'm not going to move to the sidelines in the stock just because it's running in place. I think that's a foolish endeavor. I'll maintain my exposure there. I'll be thankful for the 800+% that it delivered me while I owned it for those 2-year periods. I'm not going to move to the sidelines.
It's opportunity cost. It's opportunity cost.
Right, and everybody who owns the index is maintaining their 7.7% position in it, so it's hanging around there. We have to run for just a minute. Up next, Steph has a new buy. She'll tell us all about that. Plus, we'll break down today's top movers, including a pop or Delta. Halftime. Back in 2 minutes. Welcome back. Let's get to Steph's new buy. Steph, you bought ServiceNow. Looks like it's in sort of recovery mode to some degree here.
Well, I hope so.
Yeah.
I've been adding to software, Synopsys, Palo Alto. This is a new position, though, ServiceNow. I've never actually owned it. This stock is down 44% from its high. It trades at 27 times for 20% growth, 13 times EBITDA versus 39 times for its average. This is a company that has MAU growth of 25%, a retention of 98%, an excellent pipeline, and operating margin expansion. So I don't know if this is the bottom, but this is quality on sale as I have this as a definition. And they have an analyst day in May, which I think will be a nice catalyst for, just getting comfort that the growth is still there.
Brian, this has been the kind of stock that sort of faces the burden of proof that they're not going to get displaced by AI one way or another. Bill McDermott was here with me and the group on, I think last week on Friday, talking about how AI can tell you how to do things that can't actually do it for you that ServiceNow does.
I mean, this is a name, too, that we love a lot as well. I think at these levels, and Stephanie's actually doing an amazing job picking off these great names, especially if you believe that the upside is still there and the stock maybe was oversold due to this panic with respect to going on software in general. And I do think the AI theme that everybody seems to want to believe that there's going to be less jobs. I could build you a case there are actually going to be more jobs with some of the AI situations with respect to engineers. And I don't think we don't talk enough about that on this show in terms of the software engineering help that's going to be needed to interpret some of the AI data as well.
Yeah, that's certainly, I guess, the hope. We do want to get to Delta in particular in the airlines. Up 5% today. The company did raise first quarter guidance on some strong demand trends. Joe, you do own this one. Of course, the whole group got smacked in the last couple of weeks.
So this is obviously the premium airline, and they're able to defend against rising costs, whether that's labor or now it's going to be fuel. Remember, they do have Monroe Refinery, so they have the ability to access the oil at better pricing levels. I also think they benefited from a pull forward. And I think the pull forward came from the consumer recognizing smartly that prices will be much higher for those summer travel trips. And they said, let's get in front of that and book now.
Let's quickly also mention Uber, also up 5% right now, planning a robo-taxi rollout in 28 cities starting next year. Josh, game changer or no?
Yes, this is a game changer. They've just made 4 announcements in the last 5 days. One was with Wave and Nissan. Another was with Zoox, which is backed by Amazon for Los Angeles and Las Vegas. There was a third one. It probably wasn't that interesting because I already forgot. And then this, which is a really big deal. NVIDIA is going to equip all of the OEMs, every car manufacturer you could think of, with the chipset and software that will enable those cars to become autonomous. And once that happens, all of those cars via NVIDIA will be ultimately on this Uber network of autonomous options. I think they're checkmating the game. I think the narrative that's driven the stock down from 100 to 70, that like somehow they were blockbuster, I think you can laugh at that at this point. They are going to have the broadest network of partners who are offering autonomous rides on their platform, and they'll be the best at it because they always have been.
All right, Josh, thank you. We got to go for the moment, but final trades are up next. Somehow we're almost done. We're back with final trades. Josh, start us off.
Remaining long Uber.
All right, you just told us why. Excellent. Brian.
Talking the talk and walking the walk. We like the small cap banks. Pinnacle Financial.
All right, Steph.
Bank of America, 1.2 times book value, still down 14% from its highs.
And Joe.
At the end of October, we bought eBay at 81. I was puzzled why we did it. Now I understand why. That's the final trade.
You were puzzled why you did
we bought it, yep.
Not why you didn't. Excellent. All right, up 4% today. That's going to do it for halftime. I will see you at 4 on closing bell overtime.
Hello, welcome to the segment of the video where we are going to go over the stocks that they talked about on today's episode of the Halftime Report. My name is George. This is Blue Cloud Trading. It's Tuesday, March 17th. It's 4:22 p.m. Eastern Time. Market is closed. All indices were up today, but just slightly, actually, not a whole lot. The Dow is up 0.10%. NASDAQ up 0.47. The S&P 500 was up 0.25% at 0.25. And the Russell 2000 was up 0.45%. We're going to take a look at the heat maps, like the S&P 500, some of the theme heat maps here. See how crypto is doing. Bitcoin up just slightly, 0.06%. How's the world looking these days? Okay, a lot of green here as well. We'll take a look at the individual ETFs here, like the SPY, the QQQ, the Dow, the Russell, the VIX, which represents volatility in the markets. We'll look at the Euro stocks, FEZ ETF, and we'll take a look at the Mag 7s. We'll look at CNBC's stocks that they talked about, and ETFs. They're all mixed up in here. There's about 18 of those. And 2 of our members' requests, AAOI and AVAV. We'll look at those 2 stocks as well. I've already previewed all of these. I can tell you, so we're going to look at the technicals. We're going to be using something called Ichimoku. It's an indicator, Japanese indicator. And it's going to help us identify the strength of the trend on any of these specific stocks and ETFs. So before getting started here, let's take a look, folks. Let's go back for a moment. I just want to take a look at some of the news that came out here today. The stocks and futures advanced as major indices closed higher despite the rising oil prices and Iran-related tensions. You can see here that the Russell advanced 0.58 there, outperforming large cap benchmarks. Brent crude settled at $103.71 per barrel, up 0.28%. Very interesting. So the S&P futures were up 0.26 after hours. And Uber shares rose 5% after hours on news of an expanded self-driving partnership with NVIDIA. Micron Technology gained 4% ahead of earnings on new chip production news. Eli Lilly fell 5% after hours following a downgrade from HSBC. Delta and other airlines saw pre-market gains after Delta reaffirmed its Q1 profit forecast and raised its revenue outlook. Let's take a look at that heat map once again. And here you can see that NVIDIA closed down 0.7. Microsoft was down 0.14. Broadcom down 1.11. But there's the Micron with up 4.5%. Google was up. Amazon, Tesla were both up. But yeah, the Eli Lilly and Johnson Johnson were down there. The consumer defensive stocks did not do so well, but energy stocks once again highlighted mostly in the green. Financials had a little bit of recovery here, but as you'll see in a few moments when we look at some of those financial stocks, nothing really to get too excited about. Here's the groups segment. This shows us the one-day performance for the individual sectors, and you'll notice that energy up the most, up 1.29%. Consumer cyclical, communication services, financial, industrials, technology. But healthcare, consumer defensive utilities were down today. And here's the 1 week performance with energy in the lead, up 5.12%. For the 1 month performance, energy is up 9.11. 3 month performance, energy is up 28.86. And half year performance, energy is up 32.08. It's just when you start looking at the 1 year performance that you recognize that basic materials is still edging higher than energy, 42.35%, because of gold and silver, a lot of the metals. Basic materials as a sector did pretty well. So let's, oh yeah, I wanted to take a look at one more thing, guys, before we get to the stocks. I want to take a look at the themes segment here. This shows us the, you can see here artificial intelligence, for example, some of the stocks and how they perform today. Space tech, a lot of green here. So some of the companies within there and their percentage moves up. You've got biofuels up, oil services up, environmental sustainability up, and agriculture up. LNZA up 36.89%. Let's take a look at that one. I'm just kind of curious. LNZA. There we go. Yeah, 36.89%. Big jump today, but it's still currently under the Ichimoku cloud on the weekly chart. Here it is on the daily chart. That big spike that you see came up, reached the 200-day moving average, and retreated. If we look at the 5-minute chart, you can see that pullback here towards the end of the day. This is in the waste management industry under industrial sector. All right, now let's get started first with the index ETFs like the SPY. I'm going to switch it over to the weekly chart to show you guys what's happening here on the weekly chart real quick, and then we'll look at the daily for the SPY. So here we have the Ichimoku indicator. A lot of lines. It might look a little bit confusing at first, but it's actually a pretty really simple indicator once you understand the nuances of it. So it's comprised of 5 lines. You've got the green line, Tenkan-sen. It's the midpoint of the last 9 periods, not the closing price like most moving averages. You've got the Kijun-sen, the red line. That's the midpoint of the last 26 periods. So it's a little slower. And we want that green line above the red line. That's important. Then you've got the actual cloud itself, which is comprised of 2 lines. And that's the Senkou span A, the light colored blue line that you see right there. That's the midpoint of those 2 moving averages projected into the future 26 periods. Okay. And then you've got the Senkou span B, this purple line here, which is the midpoint of the last 52 periods. But unlike these 2 moving averages, which are directly right under or above the candle, this moving average is projected into the future 26 periods, and that's what creates the cloud itself. And what we're looking for is a thick cloud. We want the Senkou span A above the Senkou span B. That's a bullish cloud. The wider the cloud, the stronger the trend. Now, one final line is the Chikou span. It's this white line that you see right here. Okay. And you'll see that's lagging. It's behind the candles here. It's essentially the current price projected 26 periods into the past in a line form. And the idea here is to see where that is in relation to the candle 26 periods ago. If it's above it, that's bullish. If it's under it, it's bearish. So in order for this indicate, how do we recognize the strength of the trend? Well, when we have price above both of these 2 moving averages and above the cloud, which is a bullish cloud, of course, then we know that we have a strong, very strong trend. Right now, I wouldn't call it a very strong trend because as you can see here on the weekly chart now, we have been for the last 4 weeks, okay, declining. See here where price closed under the 9 period, the midpoint of the Tengensen. So there's 4 weeks now that we've been under. We got under the 26 period as well. And although we had this little gap up here on the weekly chart, this candle is still forming, and we won't know what that looks like until the end of this week. But what we can do is take a look at the daily chart. And this gives us a little bit more insight on what's really happening under, under the radar here. So between the lines, okay? So what we've got is price under the Ichimoku cloud. That's very bearish. So the daily chart is still very bearish for the S&P 500. It has pulled back. The good news is it did find a little bit of support here at the 200 and did start to move up slightly. But look at the candle that has formed here. This is called a red spinning top. Let me show you guys this candle on the cheat sheet that I use. Okay, so if you come to my Twitter page or x.com under at Blue Cloud Trader, that's where you'll find it. If you scroll down to this right here, this tab highlights, click on that, scroll down a little more, and we'll find it right here. Here's the candle pattern reference sheet. Click on it once and it will expand. And what we're looking for is this candle here, the bearish spinning top. It's under the single candle patterns and it's bearish. When you see this type of candle after a move up, okay, that's very bearish. Or if you see one of these gravestone dojis or a shooting star, okay, or the hanging man, that's all bearish if you see it after the price has moved up. Those same candles, interestingly enough, can be very bullish if they materialize at the bottom of the move. So if price has been declining and you see a hammer, okay, that same candle here, the hanging man candle, but you see it at the bottom, they call that a hammer. Here we've got the inverted hammer, this candle right here, which over here is called the shooting star. You got the dragonfly right there, okay? And then there's the bullish spinning top. So again, if price has been declining, you see this, it's more than likely the next day to pop to the upside. It's a higher probability trade. It's not guaranteed. Nothing is guaranteed in the stock market. There's some other patterns down here, double candle patterns and triple candle patterns on both sides. And if you want to understand how candlesticks work, there's a little bit of information right here about, how the candle is formed, the opening price, the closing price each day. If you're looking at a daily candle, the wick at the top represents the high of the day where the price met, how high the price went. The wick on the bottom shows how low the price moved down. But the body shows the opening price and the closing price. And if it's green, that means that the opening price was here, the closing price was here. If it's a red candle, the opening price was at a higher level than the closing price, which is the bottom part. But the wicks still represent the same thing, the low and the high of the day. Okay, so let's get back. So as I mentioned earlier, if you see this type of candle, the spinning top, after price has been moving up, and you can see here from this low here, it did in fact move up. That should be a warning signal. A couple of other things that are happening at the exact same moment on this daily chart. This price has reached this 9 period moving average. It's also right under the cloud itself. So things are still looking very bearish as far as I'm concerned with the S&P 500 on the daily chart. On the QQQ, up 0.49%, but look what happened. We got another, this is called a doji, very similar to the spinning top, also bearish if you see it after prices moved up. Again, this has not been a huge move, right? Yesterday price gapped up, okay, created this reversal type candle. It was not a really bullish candle if you ask me. Today the same situation, it gapped up again. And again, I think the reason why we're not seeing any big moves here is there's not enough information out there quite yet. Here's what's happening tomorrow that's going to really make this market move quite a bit. All right, let me show you guys. There are actually a couple of things. At 8:30 a.m., all right, this is the earnings calendar, all right, for this week. And if we go to Wednesday, March 18th, at 8:30 a.m., if I hover here, producer price inflation, we're going to get that report. And when we do, that's going to impact price in the morning, like when the market opens and even pre-market. But then the more important thing, in my opinion, is the Fed interest rate decision, which is at 2 p.m., the FOMC economic projections. And then at 2:30, the Fed press conference when they start asking questions. And so that is going to be really, I think that's what's going to lead the market either to the upside or to the downside, dependent on how Wall Street takes that information. That's why we really can't make any huge decisions here quite yet. The next day, Thursday, there's not anything really major happening for the economic report, economic earnings. So I'm sorry, in the earnings calendar. So, and on Friday, same thing, right? There's nothing major happening here. No really impactful news events. But those ones that I just mentioned, you want to pay attention to very closely. All right, and of course, I'll be sharing my insights on that. So let's get back here. QQQ, also, like I said, up a little bit here. Nothing to be excited about. I mean, price has been consolidating for a very long time now. And it's more bearish than bullish, in my opinion, on the Qs. The Dow Jones, let's look at that as well. All right, still in a decline. Price actually did move up quite a bit here. It gapped up this morning for the Dow. It moved up to this level, very close to the Tenkan-sen, and look what happened. The sellers came in and they started pushing price down throughout the rest of the day. You can see that, of course, if you switch it to a shorter time frame. So I'll show you guys what I'm talking about. Let's go to the 3-minute for a moment. And here's today. Okay, here we are on the 17th. So there's the big gap up that occurred pre-market. It led to a very short little move up. And then look, once we reached this time here around 9:45 a.m., that was the high of the day. Since then, it dropped 0.9%, almost 1%. And it's currently on the 3-minute chart. You can see it's under the Ichimoku cloud and looking bearish. What about the Russell 2000? Russell 2000 on the daily chart is still in very bearish territory as well, under the cloud, stalling right at the bottom of the cloud. So there's a level of resistance here that it cannot get through, obviously. But tomorrow we're going to get some insights. So that's what I'd be waiting for. It's going to take a lot in order for price to like really start breaking above. We still have a lot of issues going on with obviously with the war in Iran too. So that's gonna as long as oil prices are high, I don't really expect the stock market to be doing well under that scenario. Because there's less profits for companies, transportation costs. All right, as prices continue to rise for gas and whatnot. Here we have the VIX, which did drop 4.5%, but it's still above the cloud itself. And it's at a level of 22.37, which is significantly higher if you think about back here in January, where it was only at 14. Okay. And at a low of 13 back on December 2025. What about FEZ? This is the Eurostoxx 50. So yesterday we had this bullish harami pattern. I'll just show you guys this. It's a double candle pattern. It's when you have a large red candle followed by a small bullish one. And that typically leads to a pop to the upside. And in this case, it did do that. In fact, it gapped up. But then the rest of the day, it spent dropping, as you can see here, and closed under the 9 period here. So that's bearish for the Eurostoxx. And it looks more bearish than bullish, obviously, on the daily chart. On the weekly chart, if you look at the weekly chart, it's still under the moving averages as well. We're still above the cloud. The overall, I suppose, the long-term trend hasn't been broken quite yet on the weekly chart, right? It's going to take a lot more candles for that to occur. But we're not off to a good start here with the the directional movement index becoming bearish recently back on March 6th, where you can see that crossover took place. And look at that we had that big gap down here. And then these last 3 weeks have been very bearish overall. Except for, like I said, like Monday and Tuesday this week where we have this little pop here. But it's a very small little move up. All right, let's keep going. Let's take a look at, again, I'm just going to switch it to the daily chart because those weekly candles haven't formed yet. Here's Apple, all right, on the daily. The cloud itself, the future cloud has turned bearish. That's when the Senko Span A crosses under the Senko Span B. Price is still under the cloud. It's under the moving averages. And Chiku Span, the white line, is under price 26 periods ago. So all of that is very bearish for Apple. What about Amazon, which was up 1.63%? It's been slowly but surely moving up. We can see a little series here of higher lows, right, and higher highs. right? But as far as I'm concerned, this may in fact be a bearish pattern called a bear flag. Guys, do you see this here? It's when you have a big drop and then price moves up, makes a series of little miniature higher highs and higher lows. Let me show you this pattern real quick. Going back to the Twitter page here, right under the candle pattern reference sheet, if we scroll down a little bit more, you'll see this stock patterns cheat sheet. You click on this. I'm going to show you the pattern I just talked about. This, okay, right here. It's called the bearish flag. This is the bearish variant. It's when price has been dropping, and then all of a sudden you see this little series of moving of higher highs and higher lows here, but they're really tight and compressed, right? As you can see here. And basically it creates like this, what appears to be very bullish to the plain eye, because you get a higher high and a higher low. But after a big decline like this, okay, can, if price gets under the low of that diagonal trend line, expect it to drop more. The alternative, the bullish variant, is when you see price having had a big move up and just a little series here of lower highs and lower lows, and then price breaks above, okay? Other patterns like the pennant, these are different. And if I see some, I'll basically show you guys that as well. So let's get back to the chart. So that's what I'm talking about. I'm seeing more of a bearish flag type pattern here with Amazon. And we'll see if I'm right. We're still under that 200. We have a bearish cloud still here. All right, Google. Okay, so this one here is currently under the Ichimoku cloud. Obviously, it's under the Kijun-sen, the 26 period, right? The Chiku span, the lagging line here, is under price. The cloud is bearish. I mean, the only positive I'm seeing is that price has been holding just for a couple of days now above the 9 period. That's not enough to sell me personally on the fact that this is the time to get into Google. All right, we're going to need to see more strength, and we don't have that yet. We've got Meta here showing more weakness under the cloud. You can see it moved up, and today it's down 0.76%, where some of these other tech stocks were up. Meta was down. What about Microsoft? Let's look at that one too. MSFT, still under the cloud. It's been under the cloud and under these moving averages. If you measure from this point here, back on October 30th, 2025, Microsoft has declined approximately 24.8%. So you can see the advantage of using technical analysis to keep you out of trades like this when things are looking weak. You want to wait for the strength to come back in. How do you know? It's when price breaks through that cloud once again. And I'll show you, we'll just go back in time and I'll just show you an example. Right here, for example. Let's go back a little further just so I can show you the decline first, which occurred back here in right here on January 30th, 2025, right? From that breakdown, price had declined to a low of around 346.54, 17.5% drop in just 2.2 months, if you measure, okay? What happened? Once it broke back above the cloud, all right, from this point right here, if we measure to this high, it moved up about 30% in just 3 months. This is simple. It's not it's not like you don't have to be a scientist. You don't have to be a rocket scientist. You just basically need to observe what's happening on the charts. The charts don't lie, right? They're going to tell you what's really happening with the stock. Is it healthy, or is it currently in a sick mode? And if it's in a sick mode, then you want to wait for it to start showing some strength once again. And right now it's not doing that, okay? How about Netflix? Netflix is interesting because Netflix really did try to make an attempt here. It did make an attempt because it has been declining. I mean, since these highs back here in July 1st of 2025, Netflix had dropped literally 43.9% in just 8 months, okay? Now, since these lows here, it created a little double bottom. You can see that right there. It gapped up over here, got above the moving averages. Everything starts to happen, slowly and methodically. You can see the volume came in. You can see the directional movement index started turning bullish here, and price entered the cloud, and things were starting to look more and more bullish. The only problem is the Ichimoku is amazing because it shows us how even when price is inside the cloud, and that's a time that you still don't want to be entering a position. You want to wait for the close above the cloud. Look what's happened. Price made it to the top, the Senko Span B. If we zoom in here, you can see it very clearly. And what happened? It got rejected at that level. It got rejected again, stayed under, stayed under, stayed under. Over here, stayed under. And over here, it's staying inside the cloud right now. So that even though you can see it piercing and getting above the cloud temporarily, it's all about where price closes, and it was down 0.88%. So the bulls were not in control here by any means. What about NVIDIA? Let's look at NVIDIA for a moment. Look how messy this chart looks with NVIDIA. Even after the CEO coming out this week. I mean, look at this box that it's been stuck in this basically consolidation area. Why tie your money up at this particular time? It's not the appropriate time to be adding in my position. In my opinion. So I would hold off on this one. Okay. If you have a position, you can just hold it and just wait and see what's going on, what's going to happen here. But it could be a while before we see something positive happening here with price breaking above. It's more than likely, honest, to drop. I know it sounds crazy, but I'm just saying because it's already made its run. Okay. Right now, we're in a different stage with this stock. So we'll see if I'm correct on this one. Tesla, also in the decline here, right? Also in the decline under the Ichimoku cloud. Finding some support at the 200-day at least, but I would stay out of that one as well. And if we look at we're going to run through the rest of these quickly. We don't need to spend too much time, and then I'll look at the members' requests as well. So let's start off with the top 3 out of 18 stocks. Just 3 of them met the criteria of the Ichimoku, so I flagged them with a little blue flag here, like Oil K, for example. This is the ProShares K1 Free Crude Oil Strategy ETF. Look at the weekly chart here. Okay. Is it overextended? Absolutely. I mean, it's like gotten so far away from the moving averages on the weekly chart. How about the daily chart? Same thing. But the bottom line is there's demand and price continues to move up for Oil K. I'm not sure I'd be adding right here, but if as you can see, price once it got above the cloud, it's moved up about 39.1%, and that was back on January 21st of 2026. When it was under the cloud, it just continued to drop. Okay, let's look at PSX. Here's another one that popped above the cloud here on January 5th, and that's moved up 25.8%. And I want you also to notice how, just as when price, for example, when price is under the cloud, it finds resistance. When it's above, like it is here, many times it will find support at the cloud. Look at the support right there. It holds it up. Right here, finding some support at the cloud. Right here, finding some support at the cloud. Why? Because price was above it. It's harder to break through. Over here, same thing, right? So the cloud is a great guide. PSX stalling at this 174.08 level. If I switch it to a weekly chart, we can look to see where that line comes from. It goes all the way back to 2024 here, April 5th. So that's where it's stalling right now, okay? And so not something that I would be adding a position in at this particular moment, but everything looks great. I would probably want to make sure it breaks above the 174.08 and closes above there before I would think of taking a position on that one. XLE, on the other hand, has done just that. It's above the 57.88 level. I mentioned this yesterday, how price closed by just 1 penny or 2. Yeah, it closed yesterday at 57.90. It was up 2 pennies above the 57.88 level, which was its prior high. Okay. And look, it's up 1.04%. So there is something to the breakout strategy that has been very beneficial for my trading, at least. And guys, if you want to become a member, real quick, while we're here, let me just show you guys how to do that. If you want to get access to this member-only video, you won't be able to see this unless you become a member. To do that, you click the join button, which is right next to the subscribe button on my YouTube channel, Blue Cloud Trading. Once you click here, these 3 tiers will pop up. select Blue Cloud Trader to get access to this video. You won't be able to see it under Blue Cloud Supporter, but you would be supporting the channel, and I do appreciate all members. Thank you, supporters. Thank you, traders. And thank you, Legend level members. Most of my members have upgraded to Legend level membership because they also, in addition to getting these videos, they also get the daily trade updates on my portfolio. And there's other things you can request up to 3 stocks or ETFs be analyzed on an upcoming video. Okay, so once, you can do that once per month, of course, but just some of the perks. And then if you haven't subscribed to the channel, it takes 5 seconds. Hit that subscribe button, hit the notification bell. That way this channel will be basically suggested to you more often. Okay? You want to see this, you want to stay on top of what's happening in the markets. Anyway, let's get back. So energy, I like that one. Now the rest of these folks, the rest of the stocks that they talked about, there's something off technically on either the daily or the weekly chart. All right, like XLE, for example, that looks good on the weekly chart as well. All right, looks good on the weekly and daily. So does PSX. Here's PSX on the daily and the weekly. Right, it's above the cloud, above the moving averages, but that's an important level. That 174, even on that weekly chart, you can see that it needs to break through there. In fact, I would actually wait until Friday on this one because this is a weekly level. The 174.08 is a weekly level. I would wait until Friday afternoon before the market closes before I made a decision on this one, honestly. And then oil K, of course, on the weekly chart, you saw that was pretty high. So the rest of these, APO, not looking particularly great here. It has stalled, at least on the weekly. Here's the daily chart. You can see it's almost like a little double bottom. We're above the Tenkan-sen, but we're still in a decline under the cloud. I wouldn't jump in here yet. ARES, same situation. It's actually worse because it hasn't even broken above the 9 period yet. A lot of times what will happen is you'll see these little moments, during the week where price moves up, like there, right there, moved up, right there, moved up. It was due for a little move up. Tomorrow is going to be the determining factor. If price gets under these lows here, under that low of that candle, watch out. It's going to continue dropping. BAC, same situation here. Even though it was up 0.49%, that's not a bullish candle. That's Bank of America. BKR. Okay, now this looks a little bit more enticing compared to the rest, but that's because it's in the oil and gas equipment and services. It's in the energy sector, which is a strong sector. This hasn't really performed that well. If you think about it on the daily chart here, it's been declining these multiple days since March 3rd. But once it reached the cloud, okay, you can see here it's found some support here. We've got a bullish harami, a large red candle followed by that small bullish candle. Let me show you guys that pattern real quick. It's a double candle pattern, okay, and it is this candle, this pattern right here, right there. Large red candle followed by the small bullish candle. That's very bullish. Now, again, we're still under the cloud. I'm sorry, we're still under the Kijun-sen, the 26 period. So we're still not out of the woods yet, and the Chiku span is still underpriced. So there are better opportunities out there. I wouldn't be adding this one here. The ones that I talk about each week, during the week and stuff, and on my watch list, I shared a lot of great stocks. So consider becoming a member so you can get access to those. BLK, BlackRock Incorporated, still under the cloud, but it moved up slightly. It moved up 2.98% today. But look, what's waiting is that moving average there in the 9 period. So no on BlackRock. BX, got above the Tenkan-sen, but it did that back here. It did that back here. And then what happened? It got rejected, ended up dropping. So nothing particularly bullish happening to make this move up 4.56%. There's no catalyst that's occurred. Same thing here with the Carlyle Group. Okay, dropped. It's been just moving up slightly here and still under the moving averages and under the cloud. Delta Airline, on the other hand, I like what's going on here. That we see this big gap up that occurred today, and it was up 6.54%. And we have that positive crossover, but we're still under the cloud. And there are still better opportunities out there as far as I'm concerned. We broke through this low here. Just curious to see. Oh, yeah, it did it? Let me just draw a line. Hold on. Let's get a support level there. Whoop, right there. Okay, so the low there, 64.47. There we go. We got above it, but again, we have a bearish cloud. Chiku span is underpriced. No on Delta for the time being. but I wouldn't be shorting it here. Obviously, you can see the volume is starting to come in. Okay, so don't be shorting this one. eBay. This one looks more bullish, of course, on the daily chart. Today, it was up 2.41%, and eBay actually broke above the Tenkan today. We do have a long wick at the top, which is a little bit concerning. If you switch it to a 3-minute, you can see the selling that probably took place. There it is, towards the end of the afternoon on eBay. So we had that big move up, but then it created a double top pattern up here, right, in the afternoon around 1 p.m. or so, and then it started declining. So yeah, I don't know. I'm not too crazy about this type of candle. I do like the fact that the daily looks bullish here. Let's look at the weekly chart. So the reason it didn't get a blue flag is because of the weekly chart. If you look at the faster moving average, it's currently under the slower one. That's bearish. It's just one bearish thing. But otherwise, I like eBay. Okay, it needs to show some more strength. That's all. We've got ServiceNow. This was Stephanie Links. She was recommending this today. I think that's a bad move on her behalf, recommending it at this particular time. Here it is on the weekly chart. As you can see, it's under the 200-day moving average. It's under these lows here. It found resistance at the 123.78 level right there. Not once, but twice. And if you look at the daily chart, okay, look at this. I mean, it's been declining forever. Has it been moving up slightly? Did it create a double bottom? Yes, it did. But in my opinion, this is not something that I would be overly excited about quite yet. We're still under the cloud, and it seems to be finding resistance right now still. So no on ServiceNow. OBDC, Blue Owl Capital, still under the cloud. No on that one. It was up 3.15%. Blue Owl Capital, the other ticker symbol. This is the financial services sector, asset management, under the cloud, under the moving averages. No on that. PNFP, no on this one. This was one of the final trades on the halftime report. I can't remember who it was that recommended this, but yeah, it's not looking like a pretty chart here. If you look at the weekly chart, we're currently under the 200-day. And you know what else I don't like about this one? I'm just kind of curious. Let's just take a look. I mean, maybe it is finding support, I guess. See, here's the thing. There's a multitude of levels here. I think we have to use 2 lines because let me go ahead and color this blue to represent the weekly chart. Yeah, I mean, if you look at the most recent weeks, no, I want you guys to just pay attention to what I'm about to show you right here. See that low? It touched that level and it bounced. It touched here and stayed above that level. Touched and stayed above, stayed above. Look at multiple times that it did that, right? And look last week here on Friday of last week, on Friday, March 13th, it closed under. What else am I seeing here? I'm seeing ADX moving up. That represents momentum increasing while the red line is above the green line. The negative DI9 is above the positive DI9. That's bearish. So we've got a lower low here from the prior low. Okay. Now, technically speaking, we do have a higher high because if you look at this high here, it is higher than this one. We got what's called a megaphone pattern, basically. Yeah, so this is, I would skip this one altogether. Don't even consider it, in my opinion. Let's look at Uber. Uber has been moving up here a little bit. This was Josh Brown's recommendation at the end of the show. Final trades. Here's the weekly chart. So for multiple weeks, we've been moving up slightly. Okay, but the problem is it has resistance, right, at the cloud. Right at the cloud, as I mentioned earlier, whenever you find resistance, you don't want to be adding positions there. Here's the weekly, here's the daily chart. I mean, look at it. Right at the bottom of the cloud, not just the weekly, like right there, but also on the daily chart. So although we've seen a little bit of a series of moves up, I think this is more another bear flag type scenario here, guys. Do you see that? It's a tightly knit, higher highs, higher lows. All right. And that's, of course, after that, the bigger decline. All right. So this is this is the meat and bones. And this here is just a small little leg up, right, to give you false hope, in my opinion. I just don't see this popping here. I might be wrong. You never know. I mean, again, the news tomorrow will help to solidify what's going to happen. I like the directional movement on the daily chart here. That looks very bullish. But why did it stall today? That's the other thing you have to ask yourself. Why did we get this type of candle on such a bullish volume day? And so that's concerning. Look at the 3-minute chart on Uber. This is what it looked like today. Does that look really extremely bullish? Like there's a conviction? Conviction occurs when you see the gap up and then price continues to move up. It doesn't basically fizzle out, okay, and drop, which is what happened here from this high in the morning. It dropped. So that's what I'm saying. It's just that's why the daily chart can tell you so much with these types of shooting star type candles. That's what the long wick represents, is the selling that happened throughout the day. All right, and let's look at XLF. Obviously, this is a bearish ETF to be in. This is the financial sectors ETF. Stay out of that one too. A series of lower highs and lower lows under the moving averages, under the 200. Okay, next, let's look at AAOI. This was one of our members' requests. This one on the weekly chart. Let's start off with the weekly. Last week, it created this very long wick, which represents a lot of selling that happened last week, but it's still technically above the cloud, which is bullish. But I do want you to pay attention to the thickness of the cloud and how thin that cloud is. So it's because prices moved up so much, and it's a very volatile stock, obviously. From this point right here, prices moved up 100. Let me just show you guys. If I measure from December 12th, 2025 to this high, that's about a 302% move in 3 months. I mean, this is like very, very volatile and very scary, in my opinion. The type of stock that I typically don't like to trade because, yes, it's moving up, but just as something moves up so quickly, it can also drop very quickly as well. And so from this point here, this high back on Friday, March 13th, take a look. It's dropped 33.24%. Now let's take a look at the daily chart. Here's the daily. There are some good news is the fact that it's stalled right at the 26 period. That's a good sign. And although it's a red candle, it is a spinning top. And so I think I would give it the benefit of the doubt here that it might tomorrow potentially pop if tomorrow is a bullish day. I would assume that this would do well. It's in the technology sector, which is not a really strong sector right now, but it's one of the few technology stocks that's actually, looking more bullish than you would find, even with the big names. So that's my call here is I basically wouldn't be buying the stock. But if you have a position in this stock, I would certainly hold and see what happens tomorrow, because this is going to be I think the line in the sand is the high and the low of this candle. If price gets under, expect it to drop more. If it gets above the high there, expect it to at least get up to the Tenkan-sen, which, believe it or not, the distance from the closing price to the Tenkan-sen is around 18.8%. Very volatile, like I said. The beta is 6.77. All right, and then you got, so in a stock like this, you don't want to be putting in a really large position of your portfolio. You want to put in a small percentage because it is so volatile. If you typically put in, I don't know, 2%, which is typically what each of my positions are, like around on an average around 2% of my portfolio is in a specific position, then on something like this you might put 0.5%, I would say, something like that. AVAV. All right, let's see this one here. AVAV. This is AeroVironment Inc. Let's start with a weekly chart on this. So it's been also a pretty volatile stock. We do on the weekly chart have a lower high from the prior one, and price has also gotten onto this low here. So we have, you can see here, the lower high, lower low, but price is forming this week, slowly but surely, it's starting to form a bullish harami. It's inside the cloud. It has some potential on the weekly chart, but there's a lot of negative things going on here. We've got the Tenkan-sen under the Kijun-sen and the Chikou span under price, but the cloud is still bullish. And so I wouldn't be shocked to see this thing, if again tomorrow is a bullish day, I wouldn't be surprised to see it move up. Here on the daily chart, we can see that price, at least from this low, from this little spinning top, it's moved up about 10.7%, almost 11, right? So and it got above the Tenkan-sen. So where's it going to next find resistance? Right at the 2026. That's about 10.8% away. Just again, another pretty volatile stock. That's how I would trade. You know, I'd be really careful with something like this, obviously, too. But yeah, that's my call there. Let's look at this on a shorter time frame as well. Here's a 2-hour time frame. You can see on the 2-hour how it's stalled basically at these levels right here, right? And so now it's going to test to see if it can break into the cloud. Let's look at the 30-minute on that one. On the 30-minute, it did break above the cloud. So in the last half hour of the day today, right, it did move up, and it was up 5.02%. So we'll see what happens tomorrow. That, my friends, is going to do it for this video. Now, just a few more things I want to say before I go. If you go to my page here, Blue Cloud Trading, and you click right here where it says and 10 more links, click on that. You can find out a little bit about my channel and then scroll down a little bit. This is where all the links are. There's tons of links here. You can get a $25 coupon for the TC2000 software by clicking this link. You can become a member to get those videos by clicking the top link. Okay, becoming a member. And remember to select Blue Cloud Trader or Blue Cloud Legend. If you like FinViz Elite, this is FinViz Elite, which has the calendar. It has the homepage that I usually start off with here. It has news. It has a screener where you can screen thousands and thousands of stocks. Okay, literally 10,969 stocks. Okay, that's a lot. And you can select different things. Maybe you want to look for stocks that are just in Europe. You click on Europe, boom, 280 pop up. Maybe you want to look for stocks that have a average volume of over 1 million shares traded. Where's the average volume one? There it is. So you select the little box. There's a drop down. You can select over 1 million shares. Boom. It reduces the number. Let's see what else. Maybe you're just looking for a specific sector like energy, which has been hot. You click on energy. Boom. It brings it down to just 7 stocks here. So these 7 stocks, and maybe once you highlight, look at BP, for example. All right, look at that chart. Okay, so you basically get the idea. Thanks, guys. Thanks. I appreciate all of you for watching. Don't forget to hit that like button. It really does help the algorithm so we can get this video out to more people. And I will catch you all in the next video.